Wednesday the 10th of April, dollar index. So we did find support at the midpoint of the Bollinger Band, 96.84-ish. We've bounced off there. Maybe we're just going to be in a holding pattern here. Obviously it's not really possible for me to give you any clue on direction because we're just pretty much going sideways. But as I have been saying, the sort of 97.65, 75 area will be important on the upside. The midpoint of the Bollinger Band around 96.85-80. Then we've got the 100-day moving average at 96.60. Those are the levels to watch. And then we've got good support, very, very good support down here, just above 96.00 in the dollar index. So those are the levels to look for if you're trading the dollar. Australian dollar versus US poked its nose above the 100-day moving average. Couldn't quite reach that trend line, which goes back to, let me remind myself. There we go. April last year. So it's a nice trend line. It's a year old. The trend line is around 71.60, just below 71.60. We got to 71.52. So clearly that's the level to watch today. If we poke our nose up through the 100-day moving average again, I mean, really, anywhere from 71.40 to 71.60 is going to be a resistance area for obvious reasons. The high in March was 71.67, so we've got to at least get through there for any sort of positive breakout. But right now, as you can see, the bulls and the bears are not in the mood to try and dominate this market. On that US dollar weakness that I showed you on the dollar index chart, we also managed a little push higher in the New Zealand dollar against the US dollar, reaching 67.58, but we haven't managed to get through this 3-month trend line. So for the moment, I remain. I think this can go lower. Well, obviously we need to hold below this trend line to go lower. So if we start breaking above 67.60, that's going to call into question my judgment. And then bears obviously need us to start holding below the 200-day moving average, which is around 67.30. So holding below 67.60 is negative. Holding below 67.30 is more negative. But we are oversold. I'm not worried too much about that. We can remain oversold for a long time and still head lower. The weekly chart, let me just check. Remind myself. Yeah, that does look pretty negative as well. So I'm leaning to the downside. I've got a small short position on. Just to show you on the short-term chart, we have been pretty much holding this trend line. It only goes back a week and a bit. Maybe we're just pushing through it now. I don't know. We'll have to get up through 67.52 and then, as I talked about, 67.60. But actually, on the short-term charts, this is not as important. But just be aware, 67.65, 67.69. On the hourly chart, there is a Fibonacci level and the 200-hour moving average. So really, we've got to clear 67.70 for this to look more positive today. The more we go sideways, the more the levels get closer and closer together, and this has now been seen in the US dollar versus the Japanese yen. We dipped a bit as the dollar weakened yesterday, but we've had a lot of support around the 100-day moving average, the 500-day moving average, the 55-day moving average, all around that. Where are we now? That's around the 111.00, 110.90 area. So this worked perfectly. I had us buying down at 111.10.00 with stops below 110.80. Nice tight trade. Worked perfectly well. I say worked perfectly. We bounced pretty much exactly where we should have done. And so far, we've reached 111.18. So I can't say there's a lot of profit in the trade, but at least the level did hold. At last, a bit of luck in the euro US dollar. We had a strong resistance at 112.80.90. If you sold into a short position there, it was pretty tight with the stop above 112.99, risking whatever that would be, 15 pips or so. Wasn't bad. It's all you can do in markets like this. That's worked. In the short-term chart and the hourly chart, we also had 38.2% fib, trend line going back to beginning of February, or end of January actually. 500-hour moving average, so it all seemed worth a punt, worth a go. Indeed it was. Not a huge profit yet, but you can't ask for much more than 20-odd pips, 25 pips in this market on the day. So this level obviously remains key to direction. Break above 113.00 would certainly be more positive into the end of the week. Gold has finally, on, let me see now, Monday we topped exactly at that 13.01, 13.03 resistance and reversed. Only down to 12.96, not a bad profit, but we didn't quite test these peaks up here at around 12.94, 12.95, and now we're up through 12.03. So this looks a bit more positive. We should look at 13.07, 13.08, possibly a test of the trend line at 13.12, 13. We get up through there, and things look much more positive for gold. The short-term charts, the hourly charts also look quite positive. We've got the 100-hour moving average crossing above the 200-hour, and now the price has crossed above the 500-hour moving average. So short-term charts also look positive. A little bit confusing because gold looks quite positive, but silver looks quite negative. We had a selling opportunity at 15.32.35, and that's just worked perfectly as we topped a fraction above 15.32. That's not a particularly positive candle. Doji with a red body, so I'd say this looks quite negative. Anyway, we've definitely held that resistance. You can see what's going on here with trend lines intersecting 100-day moving average, midpoint of the Bollinger Band, and Fibonacci resistance at 15.29, 15.32. A lot of resistance going on there, so not surprised that we reversed. Looking at the silver chart alone, it does look like we could dip down certainly to the low $15 area. You know, you could see another 20-cent drop here. It's just kind of odd because the gold chart looks quite positive, but there you go, make of that what you will. Oil, a little bit higher yesterday, up to 64.79, but that is not a bullish candle. So the spike higher, the lower close, it's only a little red body, but it is not bullish. And when you look at how overbought the market is, you have to now wonder whether we'll reverse and at least come down to sort of 62.70, 62.60 and test this trend line. If we fall further, we'll be looking at the 200-day moving average, the red line at around 61.60, 61.50, or maybe 61.65, 61.55. So just be careful. If you're long, it's been a struggle to hold these longs, and now this is giving us a little warning signal in overbought conditions. In the short term on the hourly chart, you can see how that fib level I've got here at 63.76 held pretty perfectly. If we break below there today, we've got a trend line around 63.50, and then we've got confluence of fibs and a 100-hour moving average in around 63.25, 63.15. This looks like the best support level of the day for me, just above $63. Actually, I've just read my oil report for yesterday, and I wrote that we would target 2-week trendline resistance at 64.80.85, and I wrote that be careful here in overbought conditions. A high for the day is possible, but shorts are very risky in the bull trend. Well, I think that was right. 64.79 anyway, so we obviously did top almost exactly at 64.80, 64.85, and yes, shorts still were risky in the bull trend. There was no way I could have known for sure that we would reverse, but we certainly did. If we recover, just watch 64.80 and see if we have a little double top there. Yesterday I talked about how the US markets looked a bit toppy. There wasn't a sell signal, but I thought it was worth having a little bit of a gamble and trying a short, or at least I said that's what I would be doing. There's the weekly chart, doesn't show much. So the upper Bollinger Band was a little bit of resistance. On the short-term chart, we had some trend line resistance. We had a little negative candle on the 1-hour chart there. So I put it all together, and I also, I think I showed you the Bollinger Bands on the 4-hour chart, also hitting resistance. Anyway, it all paid off in the end. If you followed me and you had a little short position on this, worked quite well as we dipped down to 28.77, just above the Fibonacci support at 28.74.75. That's going to be important today as the 200-hour moving average powers up towards that support level. So watch that mid 28.70 area today. A break below 28.70 will be another small short-term sell signal, and I wouldn't rule out a move, well, certainly 28.60, but we've got good support down here from a trend line, and the 500-hour moving average will be powering up towards 28.45 as well. So I wouldn't rule it out. We could get down here, and that is a good support level for the week. If you're not already a subscriber and you're looking at this on YouTube a couple of days after our subscribers receive our analysis, have a look at our website, daytradeadeas.co.uk. This is the premium package, which gives you absolutely everything: video analysis, commentary, written reports, and even a spreadsheet of trades. This is what our spreadsheet of trades looks like today. Let me just blow that up a bit. So there we go. It's not working. So there you go. You get the market, a forex pair, or sometimes commodities and indices I also cover. buy or sell stop targets, and even a commentary sometimes on there. All this is included in that package, so please have a look. Just go to daytradeideas.co.uk, and if you want to look at that specific package, it's the premium fx.html.